This is the Friday, January 3rd, 2020 version of the Market Plus segment. Joining us once again is Ted Seifried. Ted, it feels weird to say 2020, doesn't it? Okay.
New decade.
New
Woohoo.
decade.
Yeah.
New decade and new year.
Yeah.
Ted, we've got a lot of questions to cover today, so we're going to do a rapid fire, if that's okay with you.
Rock and roll.
All right. Well, we've got a bunch of questions about the January 10th WASDE report coming right up. We're going to kick it off here with Craig in Iowa. With next Friday's WASDE report, do you see any limit moves either in corn or soybeans?
Hi, Craig. It's possible. I think the trade is very much keyed into the production numbers. That might not be where the fireworks are, though. It might be the quarterly grain stocks. If the corn quarterly grain stocks number comes in well below expectations, it would go a long way to explaining the tightness and basis that we had seen, and that would potentially be your limit move. I don't know what would give us a limit down move aside from a 174 national average yield, but I don't anticipate that. I suppose it's possible.
Ted, why would we see a tightening in those grain reports?
Quarterly grain stocks?
Yes.
Maybe the corn that was expected to be there might not be there. I mean, that's certainly what a lot of the rumors have been around the country as far as, why is basis so strong? Where is all this corn? Another answer to that is possibly, hey, it was a very late harvest, and what was coming in was very high moisture content. So it wasn't the fact that we couldn't find corn so much as we couldn't find available the corn ready to use. That's part of it. But another part of it might very well be corn wasn't there.
All right, Ted, taking our next question, we've got Darren coming in from us on Twitter. What are the odds that the January report won't be bullish for corn, but we kick that can down the road until September, favoring the end user?
Yeah, so I think there's a good chance that this report isn't bullish from a production standpoint. I think the expectations are going to be too bullish. We haven't seen the expectations yet. We'll see that early next week. I think Monday's the deadline for all the big polls. So we'll see them Monday afternoon or Tuesday. But I think the expectations are going to be really rather bullish. I don't know if we're going to see big changes from the USDA on this one. Even though I think there should be, a lot of us think there should be. I don't know if that's what's going to happen. So maybe it's disappointing. But keep an eye on that quarterly grain stocks number. That might be the one that really motivates us. Otherwise, we might shrug that off with the idea that, hey, if the trade deal's good, if we're exporting an extra 5 to 10 million metric tons of corn to China, that does a big thing to the balance sheet and our export number. I think there's still reason for, I still think there's very good reason to be optimistic for corn.
Okay, Ted, we've got just a couple other report-related questions coming to us from Tim in Yarmouth, Iowa. Do you think any reports play into the CBOT and funds in the market?
Do they play into the CBOT and funds in the market? I'm not sure I understand the question, to be honest with you, Delaney.
Okay, we'll take a different one, Ted. We've got one other one here coming to us from Troy in Tama, Iowa. With all the corn standing in the fields in the Dakotas, will the USDA add that to the on-farm storage number to make up a number for ending stocks?
No, officially that is on-farm storage. So that is how the USDA counts that.
Okay. Ted, let's switch tracks here just a little bit, looking at a bigger picture thing. Obviously, we're in 2020 now. We've got to talk about some bigger picture things. We've got a question here from Terry on Twitter saying, do any of the other commodities have enough strength to take acres away from corn and soybeans this spring?
Cotton's an interesting one. Wheat's interesting.
Tell me more.
Well, wheat has had a really nice rally off the lows, and Chicago wheat has gained on corn pretty significantly. Now, does that mean we go and plant an extra 3 or 4 million acres of wheat? No. But, wheat acres could be back up a little bit. We'll see on winter wheat seedings. I think that'll give us a very early indication of how we're leaning, just how we're feeling about wheat in general. But no, I think the row crops are very well established. We know that we're going to have close to 180 million acres there one way or another next year, as long as we can get them planted. It's just a question of how the mix happens between the two of them. And I think there were a lot of people that were expecting maybe 96 million acres of corn and 84 million acres of soybeans a few weeks ago. But if this trade deal goes through, again, looks like it is. I'm confident in it. We might have to plant 100 million acres of soybeans. I don't think we'll do that, but that might get us closer to that 90-90 mix that we had seen in years past.
And Ted, what are the implications you think for the markets if we do not see that January 15th signing happen?
I don't think that's, I think we'll see it. If we don't see it, it's not a huge crushing blow to the market because we've been very skeptical about it. Although, yes, we would be down, but would we be down $2 or $3 in soybeans? No. Yeah, again, I don't think we've really factored in that deal as a certainty. So, yeah, it would be bad, but it wouldn't be a train wreck. But I think that deal happens. Like, I'm not really making contingency plans for it not to happen. I'm very confident it will.
Okay, Ted, we've got to keep going. We've got a lot of questions.
Keep
You are
coming.
a popular man to answer questions this week. We've got another one here from Paul in Iowa, Northeast Iowa, farmer on Twitter. What is your target on the board for May soybeans stored on the farm?
Hey, Paul. 10 and a quarter for May.
All right, easy answer. I like it. Let's move on. Got a fun one here, Ted, because you did not wear your corn hat today.
No.
You had some viewers that were disappointed by
Me
that.
too.
Lexi
Sorry.
wanted to know on Iowa, does the no corn hat mean you have a bearish tone for the January 10th report, and also with the potential Chinese buying or lower U.S. production, could this tighten ending stocks even further?
Yeah, hi, Lexi. No, I'm not bearish corn. I do think that we can have a disappointing reaction to what we actually see on the January reports, because again, I think our expectations are a lot of people's expectations are going to be for massive sweeping changes on production, and I'm not so sure we'll see that. But no, I'm friendly corn. I think there's a lot of good reason to be friendly corn. I think the U.S. dollar is going to continue to be under pressure here this year. I think our exports are going to actually end up being quite a bit better than what we're currently thinking. I think ethanol is going to do all right. Feed is a very strong category. So yeah, no, I'm friendly for corn. What was the second part of?
The second part of the question, Ted, was with the potential of Chinese buying or lowered U.S. production, could that tighten ending stocks even further?
Yeah, so I mean, our Zaner Ag Hedge's expectations for this January report is for 1.795 billion bushel carryover. I think those ending stocks numbers could shrink down to 1.5 to 1.6, somewhere in that neighborhood. That's not $5 corn, but it's probably 440, 460, somewhere in that neighborhood. Maybe close to the highs that we had seen back late spring into June.
And what are you expecting for soybean ending stocks?
So we've got soybean ending stocks going to 490 on this report, bumping production ever so slightly, a little bit higher yield, which is contrary to what I was thinking when I was going out on crop tour. That being said, ultimately, when all is said and done, I think our soybean ending stocks could be well below 200 million bushel. I mean, we're talking pipeline, possibly below pipeline, if China buys what they say they're going to buy. I'm not sure we have the soybeans to sell China to get them to the numbers that they need to hit under this deal or whatever. And so, like I was saying earlier, I think there is a explosive potential in soybeans here. I mean, we could be talking $12 soybeans at some point. And if that's the case, and if it happens before, we really make our final decisions on acreage, you could be seeing a big push towards soybean acres. We might actually need that. I don't know if it'll happen in that time frame, though. And if it doesn't, then we can have another year, next year, 2021, where things get really interesting as well.
Ted, you're going to get people really excited by saying $12 soybeans.
Oh, yeah. Well, so that being said, look, we've had a nice rally off of lows. It is a good idea, especially if you still have old crop soybeans laying around. Hey, let's take advantage of that, okay? And then look for pullbacks like we saw on Friday to come in and own calls, things like that. So you just got to play these markets, but definitely take advantage of the rally off lows. I'm not saying don't sell cash. To the contrary, I think guys should be more aggressive selling cash on this rally than they have been. But there is reason to be optimistic. So this year, maybe more than any year we've seen in recent history, is a great year to be looking at re-ownership strategies.
Okay, Ted, I saved one of the best questions, I think, for last year. Coming to us from Matt in Anamosa, Iowa, with corn test weights lighter, how much corn will it take to feed cattle? And for ethanol, is any taking this into consideration?
Yes, so it really is a very good question. Yes, we will think, the idea is that, yes, the lower weight corn, in the Dakotas in particular, you've got a lot of 3 and 4 grade corn. That is going to have to be blended a lot more. And then, we'll probably have to feed rations are probably going to have to increase weight-wise. So, yeah, that should be better for demand for feed. Feed demand, I think, is ultimately going to be better than what the USDA is currently looking at, and that's part of the reason why. As far as ethanol is concerned, there's a lot of question marks out there. But yes, no, same thing as we were talking about feed. Ethanol, or corn as a feedstock for ethanol, lower test weights mean we'll probably be using more bushels.
Ted, I've got to ask you too, since you're kind of our ethanol guy, what do you make of all these the big five or the big ADM, Bunge, all of those people getting out of ethanol, really?
Yeah, right. It's an unfortunate situation that's been created by this administration's EPA. It's not a problem that's been fixed. There's been Band-Aids, I think, put over it. But if you look at ethanol prices, they have gotten better. Our production is coming back a little bit. Ultimately, as far as those companies are concerned, that was their decision, and what they want to do is they want to make their stock prices higher. That they thought that was the way to do that, or a way to do that. That's fine, but I think the ethanol industry as a whole is a very good industry, especially if the dollar's coming down and we get the ethanol export market rolling again. Ethanol can be really quite profitable. So, I think the ethanol industry is going to be good going forward with the trade deal with China and the potential for a lower dollar.
Sounds like pretty bullish sentiment from Ted Seifried overall.
For ethanol, yes, and therefore for corn demand, yes. And look, I think there's a good chance that 2 or 3 years from now, we look back at the end of 2019 and the beginning of 2020 as where things changed in American agriculture. We've gone through years of I'm going to say struggle. I mean, for some of us, for sure, it's been a struggle. Weather-wise, certainly last year was a struggle, but financially is more what I'm talking about. But I think things start to get better again. Maybe we just hit the low. Maybe we didn't. A lot of that's going to depend on what happens. In my mind, the dollar is maybe the biggest driving force, but certainly the trade deal with China. And do they live up to the promises that have been made? If they do that, wow, I think things can look really good for a while.
Ted Seifried, a great beginning of the year discussion. Thanks so much for joining.
Yeah, my pleasure. Thanks, Delaney.
Join us again next week when we'll look at the debate over protein levels in livestock feed, and Dan Huber is back at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.